YouTube, what's going on? This is TerrenceRe coming at you with a stock market update. Gonna go over trade in TLT and the bonds, and we're gonna talk about what range I have for the SPX and where I think it can go to, and maybe some more possible trades maybe tomorrow, right after the buffer. All right. So what I got up on the screen right now is the SPX. Today the S&P 500 was up about 35 points on the SPX, basically flat. That ain't a whole lot, a little under 1%. Um, let's see, we had the Nasdaq. Well, you can see if you look over at my watch list, I got the futures up. The Nasdaq had the biggest move on the day. You see the Nasdaq futures was up 1.11%, and then we got the Russell was up about you know 0.79%, and the Dow was only like 0.36. So it was basically flat, right? So with that being said, this what I have up, what I'm showing you is a weekly chart. And from the weekly chart, I have from the lows to the highs. This is the low of the COVID-19 or the pandemic, and then all the way to the high. And so right now you can see we hit that first Fibonacci retracement level. So all I did, I do this with just about everything. This is the way I get into all of my trades. I look at fib levels, and then I kind of play bounces and different levels in between. I drop down to lower time frames. So I drew it from the bottom to the top to the high. And as you can see right here, we got support at this first level at 4,200. We got a bounce. We got to come down to this next level at 0.382. Let me change that to percentage. Excuse me. I like now I'll delete this because I'm gonna show you guys so you'll get a chance to see how I do it. I'm gonna do it fresh. So I just come up here to where it says no tool, where it got the cursor, click that drop down menu, scroll down to Fibonacci retracement, and I'm going to draw from low to high, right? And then, so that's how it looks right there. I don't want it with all the colors because then I can't see the screen. So when I double click on it, it's going to drop up this, it's going to pull up this box. You guys can't see this box. I'm just now looking over here to see why you can't see it. So I want to change it so that way you guys can see it. Because in other words, let me try it another way. I'm going to remove it because I want to make sure you guys can see. So bear with me for one moment, and I want to make sure I'm going to stop sharing. So now y'all see my big old face. Now we're going to go back to share screen, and I think I'm going to share the entire screen and the audio. Let's see how this works. I never knew that. All right, let's see. Hide that. All right, now let's see if you guys can see it. I'm gonna come back up. Let's try it again. Hit that drop down menu. Come up here and click on Fibonacci retracement. I'm looking on my other monitor. I have another monitor where I can monitor. Click right here. It's still not showing it. It's not showing. There it go. So, and this is what so when I double clicked on it, then this box comes up, this window. So I'm gonna come down here and click on prices, and then I'm gonna back this out, and then I'm gonna X out. Now you can see all the levels. Now the 50% level or 500%, that's really not a level. People just have that as So what I'm gonna do, like some people put that on there as just like a midway point, right? And there was a specific trader that would buy at 50% retracements. I can't remember the name. Maybe it'll come to me before the video is over with. But basically, I click to take off the 50%. So this is what I have. Now, my major levels are right here at 38% and 61.8%. So that's my sweet spot in here. And you can also see that we have this was the high that was taken out during, this was the high of COVID. And then you had the low, and then it came out and took out this high. So this is a heavy support level right here, right around 3,400, right? So I do think that the market is going to continue to come down into this level. I actually could see it going all the way to 3,200, right? And now you guys can see where I get these levels from. Now, what I'm gonna do is save this because I wanted to save. So now it's saved. All right. So now that chart setting this is gonna be saved. When I click off and I'll come back, it'll always be there. Now, let's drop down to a lower level. We're gonna come down to the daily because we can see right here where we are. I do think that the market will continue to go down, but that may be a little bit longer term. So let's come down to a daily chart. So now we want to look at levels that we can place some trades on or some trades around. So we see you got, this looks like a little bit of what you got, a shoulder, maybe a shoulder, like maybe it could be a head and shoulders or something like that. Let's look at it on the hourly. Now this is live analysis. Like I'm doing this live. Like this ain't nothing. So you see you got this little shoulder here. You got this head and you got like a little shoulder. So I could see us getting maybe a pop, maybe tomorrow, get up into here. This is the expected move for the week. I do this every Friday by the end of the market or probably right at the end. I plot out the expected move for the next week. And this was the move for this week. So I think that the market will stay within these time frames, for tomorrow. So I don't think we'll get a big move tomorrow. With that being said, some things that you can do for the market right now is maybe like selling iron condors, maybe selling strangles and collecting premium, getting paid for theta decay. I don't really see a big move this week. I would think that we would need some type of news or something like that. Jerome Powell was being interviewed today. Um, by the what do you want to call it, the by politicians, whatever you want to call it, the grandstanding or whatnot, playing politics. So he was being interviewed today, but we still didn't get a big move today. So I would any premium selling, I think any premium selling strategies in the option market kind of be paying you right now as long as the market is staying within a range. What I want to talk about is the bonds. Now let's take a look at the bonds. You can see I already got a Fibonacci level set up, but let's look at it on a daily. And I'm going to draw this out on a year. So just look at it. We got it from back in December at a high right around 155 bucks, all the way down here to a low right around 107 or something like that. So with that being said, I think was a good, with this little pop for me to get long. So that's what I did. I put on a put spread. Basically, let's go to the trade tab. Let's pull up the option. I ain't gonna keep you long, but I'm gonna be strong. Come over here to the 50, go about 57 days out. I could have went 22 days. That would have been a little bit of short, too short. Um, because I do think because I'm getting in just a tad bit late, it could come down some. So that's fine. I sold the 112, bought the 107, $5 wide. You guys can see I collected $1.36 premium or credit, which left me with a balance of 364. So I'm basically risking, I don't know what, two to make one, somewhere right around in there. A little bit more than that. Maybe three, risking three to make one. Right. So my risk is 364, but my max profit is 136. You may say, well, why do something like that? Why do that type of trade? Because that's the probability of success is somewhere, my probability of 50% profit is somewhere around 80 something percent. And I can manage it like that. Now you could go naked and not buy the wing and maybe just sell the 112. You can collect what, 296. Your buying power is going to be $2,000 though. Um, I don't like that particular trade. If you came down here, say you wanted to collect 105, 185 at the 109 strike, buying power is maybe 1700. If you sell the expected move and just sell the 106, collect 123 or 1400 in buying power. So they're pretty much, that's a way to get bullish. But everything I just showed you is a way because I'm bullish. I want to get long TLT. I think the bonds, we're going to get a pop in them and they'll continue to go up. And that's how I can get long. Or you can come in and buy 100 shares. 100 shares is going to cost you 100 times $114. It's going to cost you roughly, what's that, 12 grand? If I was to buy 100 shares, let's see. That is, let's see. Yeah. But they're only going to margin you $5,600 because they margin you like half of the total when you buying shares. So it really would be, if you doubled that, that's how much but it would only margin you that amount. So I would rather just sell puts or sell put spreads. You can always, let's clear this out. If you want to collect more premium, you maybe could come, let's say you come here at the 110, right? And you see where it's margining me $1,800, but I don't want that much margin. Maybe do a wide um put spread. Come down here and buy the 100. So now what you have a $10 wide put spread. I'm collecting $180 in premium, but because I bought the wing, now I'm risking 820 bucks with a chance to make 180. As you look over here, probability of profit is 67%. Less buying, see the less buying power reduction. If I take this and delete this wing off, watch it go up almost a grand, and with an extra, $40 that you can make. So that's a way of making a trade and using your capital more efficiently, right? And these are all the things. If you could still do, you could do something like this. Let's say you want to do a cover call. Let's do. So I'm gonna click on the ask up here. It's on one. Let's put it on 100. Now, right? So now we got the 100 shares that we want to buy, right? Now let's come and let's sell. I already have a trade here. Hopefully it won't affect how this one looks. Now let's come over here and let's try to sell. Let's sell the 35 delta. Now you can see the probability of profit. I think it's altering. I'm gonna come off of this one because I already got a trade here. So let's go to a different one. Let's go to the 43 day. I just want to make sure that it's not counting the trade that I already have on. Just showing you guys some different ways of getting long out and doing different ways. So let's sell this 118. And then there you go. Buying power, probability of profit is 56%. Probability of 50%, 50. And I think you can move. See how you see the probability of profit moving around? It's going up as I move the call that I'm selling against it. So it's just changing your percentages of making money. That's all. So that's the way that I wanted to that I did get long bonds. Let's take a look at. I've been watching Amazon because, of course, it had the stock split, and I know a lot of you might be thinking, "Well, man, you missed your opportunity because it was down here right around like, what is that, 101?" So you could have got it. It was down here right around that 101, 102 area right here, and you got a low, and it popped back up, hit this resistance. What his gap is, came back down, and we back right here. I think Amazon's gonna go lower. And so the reason why I think that Amazon is gonna continue to go lower is because right now the Federal Reserve is continuing to raise rates. So I don't believe that the market can continue to go higher as long as we're in a rate hiking cycle, right? So they tell you don't fight the Fed. When the Fed was cutting interest rates, when we were at 0%, when we were at 0% interest rate, and the Fed was in the bond market, literally purchasing bonds, and the market was going up every day. And the saying was, "Don't fight the Fed." So if that's the case, um, then you shouldn't fight the Fed on the way down. The Fed isn't. They're actually quantitatively tightening right now using QT. So I don't really want to be long anything. That's not to say that we can't get bounces and that stocks can't go up. They most certainly can. I just don't want to be long them at this point. Same thing with Apple. I got Apple going lower. If we look down, you can see I have another level on the screen for my Fibonacci um, retracement. So I still think that it's going to make its way down to around the 120 level. So I may look to come in here and get short. So for me, I'll be watching to get short. See this gap right here? This may be a good place. Let's draw a gap in it. Let's fill this gap in. And let's look at, we'll call this resistance. All I'm doing, I'm up here. I'm looking for, I want to click on channel. I'm going to come right in here. Bring this out. This is going to be my resistance. So when price gets right back into here, that's right around what's called it 140. May not be a bad idea to get short. So I would probably, maybe tomorrow. Let's look at what the expected move. We got a 1-day expiration on this option, which is 183. 183. I'll put this where? Right around 140. Where's resistance? Right here. So tomorrow, just based off of that, um, I don't think that the market is going to do a whole lot of moving because Apple's not going to do a whole lot of moving just based upon the expected move. So I could see it go there, then maybe come in here and maybe sell a call spread. You can sell this call spread, collect 125, or do it naked, collect 315, buying power 1500. That's about so you're collecting approximately 20% of your buying power, which is pretty good. You come out here and sell the 20 delta, take in 190. I mean, you can come all the way out here at the 13 delta and take in a whole $100. You got a 98% probability of collecting 50% of this. It's a high probability trade. Or you can strangle it off if you want to. Sell the 13 delta, come down here and sell this 13 delta. Now you got basically a one standard deviation triangle, excuse me, not triangle, strangle. And you still collect a little bit more than right around a fifth of the buying power. That's a good, I like that trade right there. Because even if it goes down to hit that level where I got it set at 120, I still my put on On the bottom end is at 115. So I like that trade. That's a possible trade I'll be looking at tomorrow. Either selling the call side or selling the call spread or strangling it off. Um, Amazon, I like to see it. I like to see it go down some and give me an opportunity to get long. Let's take a look at energy, which is XLE. XLE is right at support for me. I actually had a trade in here earlier in the week. I think I got in somewhere right around here. It popped. I took it off. And then here we are right back down into this area. It looked like it went through it today. As you can see, the wick went through. So let's see what it looks like tomorrow. Since it went through that area, let's see if we get a pull back into here or if tomorrow just screams lower. Let's take a look at the MACD. The MACD is fully extended momentum to the downside. We got on the RSI, it's a 31 on the RSI. So one more point on the RSI and it'll be technically oversold, but we are right here at the 200 EMA. So we could get a bounce right here. Let's see what we get tomorrow. I wouldn't be surprised if we got a pop and it pushed back up into here. I have to look and see how it opened. What a potential trade like that would look like in XLE, selling a put. Come down here and sell the 25 delta, collect 220 bucks, get margin 647. That's a good trade. I like that. I like that trade. That's a good use of buying power. You're collecting, almost a third of the buying power. So that's not a bad trade. I like selling that put right there at the 25 delta. Or if you want to get both sides of it, you want to keep it slightly bullish, you can angle this off. Maybe come out here and then sell the 15 delta. You got three. Now you got 300, risking still 648. It's not gonna take off, too much more buying power just because of the fact that you already have the put on, and you could just leave that there, and then come down here and sell. Just do a 1 standard deviation strangle. Buying power went up a little bit. Let's bring this down to here. So you can collect in $2 or $209. And you basically got a 1 standard deviation strangle. Let's see. If you leave it at the 15 and then the 15 right there, that's what you got. 73% pop, 88% of making 50% of that trade. That's if you want to go out 57 days. That's more risk. I mean, if you wanted to do 22 days and take a trade based on getting that pop tomorrow, step right in here and sell the 24 delta right there. Or sell the you could still do a 1 standard deviation strangle. Sell this. See this dotted line? This is 1 standard deviation. Come right out here. There you go. I don't think you're not getting that much juice for that. So maybe I would come into the 15 delta, bring this one down to the 16 delta, collect a little bit more premium. That ain't a bad trade for the next 22 days. You could get that premium to come out of that trade. So now once you get under that 23-day, 21-day range, the theta will pick up and go fast because you're going to be so what's going to happen is the closer you are to expiration with options, you're more you're going to get the more the price of the option move, the more the deltas, you're going to get more movement in your delta. So you're going to be more susceptible to gamma risk, but the theta will also collapse faster as well. So you could come to the 22-day and do that and hold that for maybe, I wouldn't hold it no more than a week. maybe 10 days tops, and then I'd be trying to get out of that. But just remember, if you get a big move in the market, your positions, your deltas are going to change really quickly. So with that being said, guys, I hope you guys got something out of it. I went over a few trade ideas. Um and I talked about some stuff that I like. Once again, I'm in bonds, I'm long bonds. I have been buying Cardano. So, let's go over some crypto. I don't go over crypto a whole lot because pretty much crypto all moves with Bitcoin. Here on the Tasty Works platform, you can come on here and trade. They got all the major ones for the most part. The one I like is Cardano, right? You say why you like it. I just think that what's the guy's name? I don't know his name. Something Hodgkinson. I just think he's smart. So that's it. I'm taking a bet on the smart guy. That's it. So if we look at this, we can see that Cardano's right down here. We had this low um back on what is that, May 12th. We got a pop here, came back down into here, and it's still holding that low. So I have a Coinbase account. In my Coinbase account, I just been buying a little bit of Cardano. Every paycheck, every time I get a little extra money, I throw some over there and buy some. I have no idea which coin is gonna be the crypto coin of the future. I have no idea, right? I'm just buying coins because they're cheap, and if we ever do get a big move again, I'll make some money. I also been looking at Solana because it's been on its butt as well. Um, what's another coin that I like? I like Solana. I watch Cardano. One of the other coins that I like that they don't have on here, which is Hex. I have some Hex staked. Um, I do follow Richard Hart. Um, you know, I think the idea that he has for staking coins and stuff like that, it could be lucrative. It could be. Who I don't know. So put a couple dollars. I don't put if you got any. And my idea of crypto is don't put more money in than you can afford to lose, and it's a shot. You know what I'm saying? I'm taking it's a risk. So I would not use rent money, mortgage money, car note money, operation money, light bill money, ain't none of car note, none of any of that type of money. This is discretionary funds. Like you use some money that, like, hey, this extra money. Like maybe you ain't gonna buy. I'm gonna take my 6-pack money and or my 12-pack money, and I'm gonna go ahead and buy some coins. Right? You could do something like that. If you got a bad habit, make this your good habit. At least this habit right here, you can profit from financially if you get a move rather than something else. Just look at it like that. Kick you trying to kick a habit, kick cigarettes. Add up how much you've been spending smoking cigarettes. Take them cigarettes, that cigarette money, and maybe buy some coins or something. you know anyway, that's just I just want to make sure that everyone understands not to I'm not gonna come on here, and I'm not one of those mooners. One of the guys that come on here and be like, "Oh, it's going to the moon." I have no idea, and neither do they. So they're speculating just like everyone else, and they're doing these videos to get views, right? So just be responsible and think of it that way. The one thing about if you do decide to trade um, cryptocurrencies with Tasty Works, you don't. So like anything in here, I could buy some and then sell out of it. It's with cash. So you don't own the coins, not yet. I think they are working on something, creating a wallet or something like that. But right now, you don't own these coins. You're just trading them. It'd be no different from the trade that I made in TLT, that option trade that I made today, right? um on the event, like if you buy stock, you do own the stock, but this right here, you just trading it, right? You can buy $100 worth of whatever, and then if it go up, You can sell it and it's going to settle right back to your cash. You don't have to worry about getting a wallet and doing anything with the coins or anything like that. So this is a way just to trade the spot price and just speculate on the price, which is pretty cool. You know, if you want to own the coins, you'd have to use some other type of platform. As of right now, they're not doing that, but I think I've heard on the network them allude to something in the future where they may have um, a way for you to, I guess, have access having the coins. So with that, guys, um, if it's something that you want to see me talk about, leave a comment in the comment section. You got a chart, you want to see me chart something, you want to see me go over something, give my opinion, technical analysis on something or a trade or something like that, put it in the comment section. Remember, hit the like button, hit the subscribe button, and share the video. And with that, guys, I'm out of here. Peace.